Hello, fellow investors, and welcome back to Borex Investing. So today I've got another update on Nebius, ticker NBIS. So there's been some very exciting news over the past week that I wanted to share with you. First, we had a really insightful interview with Nebius's Chief Revenue Officer, Marc Boroditsky, that I think introduced the company to a whole new audience. And second, we just got a very aggressive new price target from a boutique Wall Street research firm that has an excellent track record in small and mid-cap stocks. So stick around, you're going to enjoy this. And before we dive in, just a quick note on full transparency. I do have a professional background in risk management, but I am also personally a big Nebius bull. So this is a decent sized position for me. I own over 1,000 shares outright, plus 10 options contracts at the $145 strike expiring in March of 2026. That means I'm exposed to more than 2,000 shares total. So yes, I'm very bullish and hoping to make at least $500,000 on this position. All right, so first let's start with the interview. Nebius's CRO, Marc Boroditsky, went on the Schwab Network this week and did a great job introducing the company to new investors. He explained that Nebius is essentially a full-stack AI-focused infrastructure provider, likening them to AWS, but with a specialization in AI workloads. He pointed out that they rent out their infrastructure like a service and that they can scale with smaller AI startups, but they can also take on hyperscaler level workloads like the one they just secured with Microsoft. So highlighting that Nebius is positioned to serve both ends of the market, the early stage AI innovators and the largest enterprise workloads, was very good to hear from the CRO. Marc also highlighted the extraordinary demand he's seeing right now. And this isn't just anybody confirming insane AI demand. This is coming from someone who's been around tech since the 1990s. So Marc has founded successful companies, he's held leadership roles at Oracle and Cloudflare, and he's seen multiple technology waves firsthand. For him to say that the current AI-driven demand is durable, well, that really carries some weight. He even emphasized that with Nebius, the best is yet to come, to the joy of all of us shareholders, so that was nice to hear. Finally, he mentioned Nebius's roadmap to expand its energy capacity into the multi-gigawatt range in the foreseeable future. Because of their flexibility, they're in a position to accommodate aggressive growth plans faster than competitors. So that's a major differentiator. So all in all, it was a great interview with the Chief Revenue Officer. All right, now let's move on to the big Wall Street news. We just learned that Northland Securities, a boutique investment bank, has raised its price target on Nebius from $77 to $206, maintaining an outperform rating. Even more, they've now elevated Nebius to their top pick. So that's a bold call, and it's worth breaking down. So who exactly is Northland? So they may not be Goldman Sachs or Morgan Stanley, but they're a well-respected boutique firm that specializes in small and mid-cap names. This is important because boutiques often dive deeper into companies that the bigger banks ignore, and they sometimes spot opportunities before the rest of Wall Street catches on. And by the way, the analyst behind this call, Nehal Chokshi, is no lightweight. He has a 61% success rate across nearly 500 ratings, with an average return of about 25% per call. So that's a phenomenal track record for a Wall Street analyst. So when someone like him makes Nebius his top pick, I pay attention. So why the huge move on the price target, you may ask? Well, Northland looked at the terms of the recent Microsoft deal and concluded that at full ramp, the deal could add about $3.5 billion of ARR. So, of course, for comparison, NBIS's own midpoint guidance for 2025 was only at about $1 billion ARR. So that's a massive acceleration and a clear reason why Northland thinks the stock deserves a much higher valuation. And why did Microsoft choose Nebius for such a large workload? Well, according to Northland, it came down to two things: the scarcity of multi-100 megawatt sites that are actually ready to deploy at scale, and the favorable economics Nebius was able to provide. So that combination made Nebius a logical partner for Microsoft, and now analysts are starting to re-rate the stock. So just remember, this is the latest price target update from a top Wall Street institution. So as I covered in previous Nebius videos, earlier this month, we saw Arete Research, BWS, and Goldman Sachs give some pretty aggressive updates, but this one from Northland takes the cake in terms of stock price upside. My price target is $200 for summer of 2026, but really the next earnings, which should be in the early November timeframe, is when I expect this stock to really pop and start reaching some of these price targets from current levels. But anyways, here's the bottom line. A boutique Wall Street firm with a proven track record just made Nebius their top pick and more than doubled their price target. Whether you personally agree with the $206 valuation or not, the important takeaway is this: Nebius continues to attract serious attention from analysts who specialize in identifying the next big winners in tech. Between the CRO's bullish outlook on durable demand and this new aggressive Wall Street call, the story for Nebius just got a whole lot more interesting. I'm looking at this sub 110 per share and thinking this is great value at this price point. All right, that's it for today. Thanks for watching. If you found this update helpful, don't forget to like, subscribe, and let me know your thoughts on Nebius in the comments below.